A very special shout out to CoinLedger for sponsoring this video. Thank you, David from CoinLedger. Thank you, Jordan, my personal CPA, for taking the time to chat with us today. Enjoy the video. Taxes are such an important part of the entirety of the crypto journey that we're all on. So we have to pay attention to taxes and we have to plan around it. And that's like the biggest thing. So thanks for providing the tools that you guys provide. David, you want to kick it off, kind of let everybody know what you do, what CoinLedger does?
Yeah, no, thanks for having us too. It's definitely not like the most sexy, fun topic in crypto, but our goal at CoinLedger is to just automate all of this as much as possible, so it just reduces the friction of being a part of, the crypto economy. So I started along with two partners, CoinLedger now about 4.5 years ago, and so the comparison I draw is it's like a TurboTax for cryptocurrency investors. You can use CoinLedger just to automate your capital gains, losses, and income reporting so that you don't have to worry about it. Today, like over 350,000 people really all over the world use CoinLedger to track their portfolios and just automate their tax reporting. And so that's kind of my background and a little bit about CoinLedger.
Okay, cool. Jordan?
Hey everyone, Jordan. I've been a CPA and a lawyer in this space for a little while now, and I've known David for a while since he began and his partners began building CoinLedger, which again is an extremely valuable tool, and I help advise them on the tax side. But from a CPA perspective, really my journey began much like a lot of people probably watching this, where we're trading crypto and we know there's some sort of tax impact to what we're doing. Just having an accounting and a tax background myself, I figured if I may be a little confused about what this stuff is from a tax perspective, there probably are hundreds or thousands, or little did I know, millions of people that are probably feeling the same way. So that's how my journey in the crypto tax space began, and started helping and advising clients really after the 2017 bull run. Some of those advisory services dated back to many years prior as well, but really around that time is where my journey in the crypto tax space began, and kept building the CPA firm that I have, taxing cryptocurrency all throughout the bull, the bear, then the bull market again, and now what we see, where we have some tax planning opportunities, which I'm sure we'll talk about. And became a lawyer during that time, and just trying to help people in the crypto space get all the information they can prior to having to execute maybe a life-changing transaction that they weren't aware of the tax consequences, good or bad, right? And so that's ultimately why all three of us are here, right? So that we could help people and guide them and give them a little bit of, opportunity to understand that there is and there can be planning and structuring in place with crypto. You might need to leverage a software like CoinLedger to help you get there along the way, which, it's a great tool for everyone to use.
Yep, agreed. And it makes it so much easier and less stressful to have these tools and to even just start utilizing them. And so just for context, I was on my own crypto journey trying to find good software to track everything. And I ultimately came across CoinLedger and David. And then same thing. I needed a CPA to really help me kind of bring it all together. Came across Jordan. And so I've realized how powerful it is to just plan around all of these things and to have a good grasp on it and bring professionals into play that know what they're doing, because oftentimes I have no idea what I'm doing. So I figured a good way to kick this off would be just the main question in terms of doing taxes, because I have a feeling there's a lot of people that are just, because crypto is pretty still new, they're just not paying attention to it. They're not thinking they need to be doing it. I have a feeling, I don't know what the stats are. You guys might know, but just in general, why is it so important that people pay attention to their taxes and do their taxes with crypto?
Yeah, Jordan, you want to take it?
I'll take the beginning part, because the software aspect of it is helpful to get to that point of filing the return. But the reason why it's important is it's obvious that when you're signing off on a tax return, on that bottom of the form of the first page or the second page where you signed your name, you're signing that return under a penalty of perjury. And if you do not say that you have any crypto holdings, remember when they added that question, Dan, I'm sure you remember, then that's, you're effectively lying on your return. Now, it could be a daunting task to actually report and reflect every transaction, and I totally understand that. But that's not really a good excuse when it comes to tax preparation and tax filing as far as crypto is concerned. And most people, obviously, we all know the IRS is increasing their enforcement efforts, right? But most people are not on the radar. In fact, 99.9% of the people wouldn't necessarily be on the IRS's radar. They just want people to report and reflect that they're custodying or bought or sold crypto. And that's the first and foremost reason why it's important, because there is actually a question on the tax return that stipulates, did you buy, sell, receive, exchange? I know the terminology is different for the 2022 tax year, but and they're changing the word from virtual currency to digital assets. But that's number one, why it's first and foremost important. The second thing is, we saw in 2018, 2019, people generate tons of loss, a lot of loss. And if they're not reporting that activity on their return, they're not going to get the benefit of the loss. And I say benefit in air quotes, but when 2020 and 2021 rolls around and people have all these gains, it's possible that during those bear markets when people were trading and they were active and they lost thousands or tens of thousands or maybe even more, those losses could have offset some of their gains in 2020 and 21, which is again something I'm sure we'll talk about, tax planning and tax loss harvesting. But there's many reasons why it's important. But for me, what I've seen is those two are the biggest things, because you get people that come in with returns where they didn't check the box yes, even though they clearly had crypto, and maybe we have to think about amending that return. And then you get people that had large gains in 21, but when you start talking to them and analyzing their portfolios, they had all these losses in 18 and 19 that maybe wouldn't get rid of the entire gain, but it would eat into a large portion on the carryover, right? So there's so many reasons why it's important, but those are just, I think, high level why it is. One, you sign that return under penalty of perjury, so you should at least disclose. And two, you want to get the benefit of the losses, even though we don't necessarily want to feel the impact of paying the tax on the gain. There are benefits of those losses that we undoubtedly occur. I mean, we probably have them this year, right? So it's important to keep track of.
Yeah, and I think even so, and obviously it's number one important to disclose. I think that is the obvious answer. But what you also touched on is you're going through cycles here, right? Bull markets, bear markets. And so when you're even diving in, and a lot of the lessons in this course are about technical analysis and making macro decisions financially, when you're making those big decisions, it's important to understand what taxes and, for instance, tax loss harvesting, we're going to get to that, right? What that means for crypto cycles and your decisions and how it all ties together. So I think that's big. So I guess the first general question would be, what would be a taxable event?
I can start maybe then.
Go ahead.
And Jordan, you fill in where I miss anything. In crypto, taxable events include anytime you're disposing of your crypto, which is property, and anytime you're actually earning it as a form of income. So think staking rewards, think getting paid in crypto from a job. That's all taxable income. On the disposal side, one of the biggest misnomers is, hey, if I traded one crypto for another, is that a taxable event? Am I disposing of the first one? And the answer is, and the IRS is pretty clear about this, but it's yes. And so you are incurring capital gain or loss on that asset that was disposed to acquire the other asset. This is where folks can get into some tax planning troubles if they didn't understand this, because you are incurring gain and loss along the way as you're trading one asset for another. And if you don't plan for that, you could wind up with a tax bill that you weren't aware that you were going to wind up with at the end of the year. I'll tag you and Jordan to clean up anything that I missed.
I mean, no, there are plenty of different types of events that occur that are non-taxable. We want to focus on the taxable ones. But what David said is 100% accurate. I get that all the time, but I didn't cash anything out. I didn't take this to my bank account. And that's usually like the first, thing that we have to talk about, because that's obviously not what determines taxability. And usually they say, oh, well, I know that the IRS is just starting to look into this stuff. And when they say that to me, I hate to correct them, but this is stuff that we've known since 2014. We've actually had this guidance. So it's just, they maybe had a communication issue with actually reflecting the tax nature of these transactions, because 14, 15, 16, we didn't really have that many people reporting crypto taxes at all. It was like hundreds of people, maybe 1,000 at most. So I don't think the IRS was really concerned. Now, obviously, 2017, huge amount of wealth being gained, and now they're concerned about it every year thereafter. But that is the biggest misconception, right? The taxable event of a crypto to crypto sale. If I have some, BTC, if I have some Bitcoin and I want to swap into Ethereum, is that taxable? Yes, it's definitely taxable. There are things that aren't taxable, right? Just like in traditional finance and traditional tax principles, borrowing against assets, any sort of loan, it's not taxable. Gifting, right? There could be a tax consequence, but it depends on the actual transaction. But high level, the things that we see on a day to day with my clients, and I'm sure what David sees at CoinLedger and the software side, 100% is the crypto to crypto swaps, taxable, and the earned income, right? Someone getting compensated, staking rewards, mining rewards, any sort of yield that's generated from on-chain activity. But
The one
that's
thing to build off too, which is not a taxable activity that gets asked a lot, is just moving my crypto from Coinbase to my cold wallet ledger. Is that taxable? And the answer is no, because you haven't disposed of that Bitcoin. You're still in possession of it. So that's a question we get all the time, and the answer is no. So that's great. You can transfer crypto from one spot to another as long as you're maintaining dominion and control over it and you're not disposing of it, and that's not triggering gain or loss.
Yeah. So a big highlight there is that trading crypto to crypto, taxable event. And I think that's like something still being learned by many people in the community. And then staking and mining rewards, whether you're delegating as a staker or running a node as a validator, those are also taxable events. So those, I would say, are two big highlights there.
Yeah, you might need to rein us in, Dan. We'll talk for a long period of time on very simple things.
No, it's good.
But that was a good summary of our long-winded answer.
Definitely. The staking stuff is interesting, right? Because people have different views, and there's a case that's ongoing with respect to Tezos staking rewards, and I'm sure maybe we can talk about that later. But at the high level, the conservative approach for now, and probably the correct approach, right? Because there's value being given to somebody for the use of maybe facilitating network activity. They're getting paid, they're getting compensated. That keyword, like the compensation, is why most people think that would be deemed to be a taxable event. We may get some sort of legislation, or we may get something passed that would differ from that. But as of now, yeah, Dan, you said it. And like David was mentioning, the staking reward thing. But it is a huge area of discussion for sure in the crypto tax space.
Yeah, it is. And this video in particular is not meant to be, financial or legal advice, but leaning in the way of being conservative. I think there's a lot of wisdom there. And, that's, from my personal opinion, the best way to go with these things. So I forget who, but you kind of alluded to, if you're getting paid in crypto, right? What happens when you're getting paid in crypto? And obviously price isn't always the same. It's not like getting paid in USD. So how do you track that? How does that work?
Yeah. So exactly kind of what we hit on. If you're earning in crypto, whether it's staking or a job, right, you're getting paid in crypto, you're recognizing income at the fair market value of the crypto when you received it. So if I'm getting paid in Bitcoin and I was compensated like 0.3 Bitcoin on July 1st, that's when I'm realizing income at the fair market value of 0.3 Bitcoin on July 1st, 2022. And this is the exact problem that I ran into 4.5 years ago. Is it's very difficult to keep track of the fair market value of this stuff because it is fairly volatile, but that's how you have to track it from a tax reporting perspective. And so that is, of course, why we built CoinLedger, is to help automate that. So you're not having to go and manually track down the historical price of assets when you disposed of them or when you earned them. CoinLedger will automatically pull all of that for you into essentially a dashboard. But that is the pain point, is if throughout the year you're getting weekly payments in ETH, Bitcoin, whatever, you have to go and track what was it worth in my home fiat currency, if US dollars, if we're here in the US, and that's the amount I have to report on my tax return.
Yeah, and just to add on that, that's why I think the CoinLedger platform is so valuable, because people that are getting paid in crypto most of the time, I'm not going to say always, because there are some businesses that do pay their employees with digital assets, but most of the time, from what I've seen, it's like on a contractor basis. So with that, you'll receive this money, you won't have any tax withheld. CoinLedger can tell you when the spot price of that asset comes in, what the amount of income that you should recognize would be, right, on like a tax return, whether it's a Schedule C on for like a sole proprietor, or if you have a business, an S corp or a C corp, whatever the return looks like. But that allows you to get a good understanding of what your tax burden associated with that is. So if somebody gets paid zero point 0.3, Ethereum, or zero point 0.3 Bitcoin in July, when it's at, I don't know, let's say it was at $40,000 then, remember those times, and they have $12,000 of income, they know, oh, I should probably be withholding like 25% on the federal side of that. And if they do that, they can make that decision. Do I sell it now, reserve the USD, or if they want to stay in stable coins, reserve the stable coin so I can make that payment? Or am I now treating this BTC that I'm holding as kind of like an investment? And if it goes up, it goes up. If it goes down, though, they have to understand that they have a capital loss that won't offset their ordinary income. Their capital loss will only offset their capital gains, right? So there's slippage possibly, and that's why the proper tax planning exercise would be to maybe, liquidate the portion that you want to reserve for taxes. And if you're super bullish on Bitcoin, hold the rest, hold 65% in reserve to, play the appreciation game if you think it's going to go up in value. But that is why I think the tools like CoinLedger, it's so valuable, because you can get that in real time. You don't have to go and get your Excel spreadsheet out and go to, Coin Market Cap or CoinGecko and like fill in the price. You don't have to do that. It's already there for you. So very important tool.
Yeah, agreed. And that is like the biggest thing for me, because I know we're talking about getting paid in crypto, like for your job. But for me personally, as somebody that runs stake pools on Cardano, for instance, I'm getting rewarded for that every 5 days. And it's like the same thing. It's like almost like a paycheck coming in every 5 days. Price is always changing. And especially when I realized, all right, I'm getting paid these rewards. That's taxable. Those are gains. And then if price goes down, it's like, oh man, like you got to really balance all that and keep an eye on it. So what's awesome about CoinLedger is the fact that at any given time, I can kind of update the data with a click of a button and kind of refresh the report and see where I stand. And it's amazing just to kind of see the ongoing process of how the numbers change as markets are moving up or down. But having insight to that at the press of a button, I say that I would go crazy if I didn't have it, because I'm not a numbers person. So like if I'm sitting around trying to mess around with spreadsheets and keep track of all of these like ongoing events all the time, it gets crazy for me. So pivoting from that a little bit, in terms of just, I guess, saving money and tricks to doing taxes, and if you're kind of investing or trading, whatever, what kind of tips would you guys have in that regard?
Yeah, well, from like a tax perspective, it's an annoying answer to give, but there's really not much that we can do except for something very crucial, which is harvest these losses if we're sitting in these unrealized loss positions. And we're not necessarily yet subject to wash sale rules, right? So with equities, if we're going to sell something and we really believe in the stock and we buy it back, effectively what could happen is it could disallow the loss, right? With crypto, we don't necessarily have that yet. We were supposed to, it's been delayed. Maybe it will happen, maybe it won't. But if you're sitting in a position that is underwater 10, 20, 30, or in today's day, 75, 80%, it's possible if you haven't got rid of that position, you can sell that. You can harvest the loss. It will go about offsetting all, maybe not all, but a lot of the gain that you've incurred along the way throughout the year. Maybe your portfolio is, maybe you started, I'm making this up, very, very simple example. You started with $10,000. Your portfolio, you traded all the way up to $65,000. You've made $55,000 and you've incurred gains along the way because you weren't like buying and selling and holding. You were buying, selling, buying, selling, buying, selling. You entered into a position at 65,000. You go all in this position. You're like, I believe in this token. It goes down in value 50%. Now you're sitting there, you have like $32,000. but you hold that into 2023. You're still going to be liable for that tax liability on the $55,000 appreciation in value. However, if you sell the position and you cut the loss, and now you're sitting at a $22,000 net overall gain, that's all you're going to be liable for on the tax side. You can then take out the money, reserve it for tax liability purposes, and reacquire that token at a lower price. Sure, your holding pattern will change. You won't have, it'll be further away from having a long-term capital gain, but you'll enter back into that position that you believed, obviously, when you invested $65,000 at a lower value, and you can wait to see what happens there, all the while covering your tax liability and not having to pay tax on a huge burden that your net portfolio value is less than. And we've seen that happen before, unfortunately, where people have portfolios less than what their tax liability is. And that's all because they didn't necessarily harvest the loss or reserve the capital for the tax payment. And it usually always happens like 17 and 18 when you cross over a year and we're still bullish, or 21, 22 when you cross over the year and we're still bullish. And then you're like, oh, well, I'm just going to wait and see what happens, right? So to me, that's the biggest thing from like a day-to-day side. The only other thing that you could really do is plan and structure around certain sort of transactions, but that's a little more complicated and gets into the weeds a little bit. But high level, what I would tell everyone here is that tax loss harvesting thing that you can do and planning, which CoinLedger will allow for, a great tool to actually see what that is in real time, is by far, in my opinion, the number one thing that can be done to mitigate tax liability.
Okay.
Yeah. The only thing I would add on is the simple one, which maybe not everyone is aware of, but yeah, if you hold your crypto for greater than a year and you're bullish on it and then you sell it, you're going to be incurring a lower percentage of tax because of long-term capital gains. Now, that isn't the case in every country in the world. The United States is actually friendly for that. So if I hold Bitcoin and I sell it 11 months later, I'm going to pay much higher tax than if I held it for 13 months, just because of those favorable long-term capital gains rates. So a lot of people do tax planning around that, right? Like, what is my holding period for this asset? If I want to sell it now, if I wait 2 months, 3 months, I could, pay a lot less in taxes. So that is one that's helpful. Echo the loss harvesting as well.
And I will just add to that. It's a risk, right? Because people might have done that last year and they're like, oh, I'm just going to wait 2 more months and I'll sell at long-term rates. And then 10%, 15%, 30%, and they're still waiting for the long-term position. And then they get to that point, like I was mentioning, where they're like, oh, I'm just going to wait for it to go back up. And then it doesn't. And then they're stuck. But at least, like David was saying, with those positions, they're not paying tax because there's never been a sale. It's just
Right.
how does that impact the other stuff they did throughout the year, right? So, but 100%, David, you're right. Long-term capital gains, super favorable. We don't really have that in many other countries the way we have it here, where it could be, half of the tax liability, possibly.
The other thing actually is just dealing with carry forward loss. I actually don't think that's touched on like enough. That lends into tax loss harvesting, but because capital gains and losses, offset against each other, but capital loss can only offset against ordinary income to a very small amount. If you do, like here we're in 2022, there's probably a lot of losses on people's portfolios. If you book, let's say, $50,000 of losses, that carries forward to the next year. And if we go bull market, all those losses can offset against the future gains. And so that's another good tax planning kind of in Jordan's realm of harvest your losses because they can, shield against that income in future years.
So it's not like you're just taking huge loss in 2022 and then you're entering into the next year, 2023, and then, it's in the past, can't use that anymore. You can actually take them forward into the next year. And from it becomes really interesting to kind of work all of this into the cycles of Bitcoin and just that macro trend that it's in and how we're topping out and then we're going to bottom. It's just like over and over, this is happening. So I think if you're a macro investor, like, this is why these things are so important, obviously.
Yeah. And it just pays to know the tax position you're at currently. Because if you don't have a tax bill this year, maybe you do just want to hold on to it because you're not facing a bill. But if you made a Bitcoin to something trade in February and thus it's a disposal at 60K worth of Bitcoin, right? And you're looking at a 40K capital gain, but now the price has gone down so much. Like, you should tax loss harvest out of that so you can reduce that tax liability. Again, the shameless plug is CoinLedger can help you tax plan and figure out where you're at. But
Yeah,
all those are going to be
it's
helpful.
definitely not a plug. It's CoinLedger. I feel like I would go crazy without it. I wouldn't even know how to navigate all the things that I'm doing. So CoinLedger for me, it's like a must. So this is why I have you guys here, is because the value that it brings. But kind of a good segue, unless you think there's any other really important topics you think we should hit on. But I think it's a good segue to kind of just give a demonstration of what CoinLedger does, the power behind it.
Yes, would love to. Let me know when you guys can see my screen.
You're good. See it.
Sweet. So I have done a lot of these demos in the past, so I will give y'all kind of the overview. Here we're in a CoinLedger account. Feel free to stop me too if you want to clarify anything. But our goal when it comes to software development is to abstract as much of this complexity away from the user as possible, right? You don't have to become an expert on the tax implications of digital assets to use CoinLedger, and that's of course by design. What you're going to do is you're simply going to connect up all the exchanges, wallets, places that you have transaction history, right? Transactions. You can connect, these exchanges. You can see this user has already connected a Coinbase, Coinbase Pro, Binance account, and you can bring in those transactions either automatically through what's known as an API connection, and that's just going to automatically sync up your Coinbase account with CoinLedger. You can also upload transaction history files that most exchanges are going to export to you, and just drop them into CoinLedger. We automatically map to all of those, so all of that transaction history can get imported. When it comes to more like on-chain stuff, let's say you're a big Metamask user, it's a simple process of just selecting Metamask or whatever wallet you're using, and then copying, pasting kind of the public address that is associated with your Metamask account. So I can just copy my address. I can go sync to my wallet. Depending on what blockchain I'm actually using with Metamask, I'm going to sync that up. And then this is going to pull in all the transaction history associated with this address. And that's actually going to go a step further. It's going to classify all of the raw debits and credits based on the smart contracts that you're interacting with. So we automatically integrate with like OpenSea, Balancer, Uniswap, dozens of other of the biggest smart contract platforms. And then kind of the magic happens when for the first time you can see your transaction history across all of your wallets, right? This is the limitation of the exchanges. Coinbase can't give you this information because they only know what happened on Coinbase, right? If you transferred into or out of Coinbase ever, they're limited on what they can report for you. So once you connect everything to CoinLedger, we can report on everything. So you can see the basis of this Ethereum when I traded it back in 2019, again, all automatic. You don't have to look up any of these historical prices. The gain or loss incurred. We can go look at that MetaMask account I just imported, and it's all drillable. So you can see exactly the fees, all the assets, the wallet balance changes that happen to make up this add liquidity transaction. And of course, the associated gain or loss that I booked in doing so. And then I can generate my capital gains, losses, and income reports based on all of that history, really just with the click of a button. So here we can see, I booked about $13,000 of capital gains for the year, along with, about $700 of income, which was from a BlockFi interest account. And again, all these reports are fully auditable and drillable. So you can actually drill in and see exactly where I'm booking those gains and losses from my disposals, right? Short term, long term, we can generate the relevant IRS forms based on this data. Again, just with a click, it's all automated. Or if you've got someone like Jordan who's filing your taxes for you, you can just add them to your CoinLedger account, and then they can actually jump in here for you and just download your forms and file your taxes that way. Then the final thing is we integrate with the leading kind of tax filing software. So these are companies like TurboTax, TaxSlayer, H&R Block. And so if you use those types of platforms to actually file your taxes, you can upload your CoinLedger reports right into those services just by using those types of reports. So again, at a high level, that's really what CoinLedger does. You can, toggle between all different years that you had. And I'll pause there. Any comments, Dan or Jordan, that you'd like to further look at?
I mean, I real quick wanted to point out, I love the, add tax professional. I was able to add Jordan there. And the reason for me is it makes the data is amazing just to log in to report and to view the tax report, but kind of bringing it all together for when it comes tax time and like organizing it to present it in the best way possible. That's where I love having Jordan on board to do that and help with that. And then the other thing I wanted to note was in the import section, I don't think you touched on it, but there's also like a manual area that I love because I use it. And you're able to just upload spreadsheets, like if there's certain transactions that aren't being extracted from like a certain platform. For me, it's uploading spreadsheets of rewards from Cardano staking and things like that, and it brings those transactions, and then it integrates all of that data, intermingling it with all of the exchange data, all of my trades, all of that stuff. So I think that's a really cool feature as well.
And
yeah,
I would say
one.
Go ahead, David.
Feel free, Jordan. I was just going to say that's actually one of our most used integrations, which makes sense, but is just the ability to manipulate your own spreadsheet and import it into your CoinLedger account. I will say, Dan, we just kicked off Cardano, so you won't have to manually do that for too much longer.
That is actually awesome to hear that.
Yeah.
That is
yeah,
good.
what I was going to say is that function is really great because the CoinLedger software can get you to a point. It'll get you to the point, usually for most, it'll finalize everything. But if you have a little more nuance to your crypto activity, then what would happen is similar to what Dan did with me and with our firm is we can go in there, we can even add the file because, super familiar with how the CoinLedger software works, get it in there so all of the things that need to be tracked in your portfolio are. Ultimately, there are tons of different types of transaction structures in the crypto space. Software could only build as quickly as it can, right? So the great thing about having that manual import is that there actually is an ability to track everything, even if there's no automatic integration with, let's say, the blockchain that you are working with a lot. And the reason why I think it's really great to have that add a tax professional service is because even if you are filing yourself, many of my clients, we don't necessarily have to file their tax return for them. Most we do, because they'll reach out, maybe they have something specific, something novel to them, and they want a CPA to sign off on the return. But if we don't, if they just want to do the reconciliation completed, then we can do that. We can get it all ready to go. We sign off on it. The taxpayer looks at it. They're like, yeah, this actually looks right. This is what I was missing. And then they can export that file and use it to file in a DIY manner. And they don't have to necessarily use a CPA firm to file their return if this is the only complexity to their tax situation. Some people, that's not the case, right? They need the full tax filing, and we understand that. But that's the beauty of CoinLedger as well, is that direct integration with all of those tax softwares that David just was showing in the demonstration.
Yeah. And one other thing to hit on that's relevant to that, Jordan, is you're exactly right. This space is so new and it's moving so fast that, we're trying to move as fast as possible, but there's always going to be limitations. And so one of the big strides we've made over the past 6 months is actually just to bring way more flexibility to the platform. And I'd love people's feedback on this. For example, like, Dan, if you're receiving staking rewards to some wallet, now, we're just giving much more flexibility of being able to, mark all those deposits and then classifying them as, staking income or airdrops, mining income. You can also manipulate any transaction straight from the user interface. So I will not go into like full detail of everything, but the main thing is like CoinLedger can be very flexible for your use case. And so thought that would be good to hit on too.
Yeah, absolutely. And I mean, the interface, just for somebody that's been using it a while, it really does just keep getting better and better. So that's actually awesome. The other last thing I wanted to ask was, I forget, I think it was on the tax reports page. There basically are 3 ways, right, to view or report. Right now you have a FIFO calculation method. Can you just talk and hit on those a little bit as well?
Yep. Yeah, so here in the US, we have the ability to change what type of accounting method we're using to track our gains and losses. So if you're using first in, first out, it's exactly how it sounds. The first lot of Bitcoin I acquire will be the first I sell off, meaning if I bought one Bitcoin for $10,000 and a second one for 20,000, when I dispose of one Bitcoin, the first in, first out algorithm will sell that $10,000 basis coin first. But there's other methods you can use, whether that's last in, first out, highest in, first out, meaning your highest basis coin will get sold off first. I think it's smart to consult with tax people like Jordan in terms of what method you want to use and is best for your situation. But certain methods are going to lead to lower realized capital gains for the year, and some may lead to like actually maxed out capital gains. Depending on your tax situation, you may want different options. But we do support a bunch of those out of the box. You can see this count right now is using first in, first out. But that is a good thing to hit on because we do get that question a fair amount.
Great. Yeah, people using this for the first time might be surprised how many transactions end up being kind of imported into the program. So
Definitely.
yeah, I think that was a good overview. Is there anything else either of you guys are thinking you want to add to this conversation before we kind of just close it out?
I think we hit on a lot of very valuable stuff. We do staff like a full-time customer support team during tax season. So by all means, if people have questions, we're more than happy just to answer them. Just go to CoinLedger.io and we're happy to chat with you.
Absolutely. Yeah, and you know what? As we kind of wrap this up, I just want to say, it's all good, Jordan. We're going to put links below, right? For if you want to sign up with CoinLedger, there'll be a special link in the course for you guys. Go sign up. Again, this whole course is about macro-minded investing, so I just think it's a necessary tool. And I just want to thank Dave and Jordan. If you're looking for a tax professional, an actual professional to help you, CPA, lawyer, please reach out to Jordan as well. I'll put his info down. But I just appreciate both of you guys coming on. Very grateful for kind of just talking with us, educating us on crypto taxes, and we'll see you guys soon.